Welcome back, Alpha Hunters. Hope you had a great week. The markets are closed for the week of March the 3rd of 2023, so the first closing Friday of March. And we're going to make this video kind of quick, not a lot really to kind of talk about. Still kind of market neutral, but let's kind of go over some things. Okay, so let's start by looking at what kind of happened over the course of this week. So last week I kind of mentioned I would expect, probably some early week choppiness, maybe a little slight bullishness, and then probably Thursday, Friday, probably rally to end out the week. Well, saw the market end that strong, but the first half of the week was a little bit more bearish than what I was kind of expecting. So really, we kind of started this week on a nice little gap up here, and one of the reasons why you can see on the left side here, we gapped up from last Friday was the dollar was dropping off pretty good going into Monday's open. So the market actually opened up pretty good. And I actually thought we would rally a little bit. We tried to initially, but then you saw the market just kind of very steadily come down and close out on Monday. It was kind of interesting. We weren't seeing a whole lot of bullishness coming from dollar and rates really all that much, but we were still seeing the market kind of come back down. And then we got into Tuesday and it was just choppy in the first half of the day. Saw a nice little push midday, and then we rolled over the second part of the day, or going into the close we just kind of rolled over. And then Wednesday, gapped down a little bit, just kind of chopped around, mostly just sideways lower part of the day for most of Wednesday. Not really a whole lot kind of going on. Then we went on to Thursday, nice gap down here. So we actually got a gap down, a pretty solid gap down. And we gapped down below the weekly low and the previous week as well. So we should have definitely continued bearish, but it was kind of a struggle to kind of continue to move bearish Monday, Tuesday, and Wednesday. Even though the market was moving bearish, it wasn't like having like a conviction of strength into that bearish direction. So when we gapped down then on Thursday, it kind of got bought up a little bit, hung out for the middle part of the day, and then the afternoon we just got a pop and it ran up into the close. And that's kind of what happened then on Thursday. And then Friday, just continuation of that second half of the day on Thursday move. Nice little gap up and just traded higher to close out the week. Now, what's interesting about the move here on Friday is where we got to. I'll zoom out here a little bit. Is you see, I mean, we cleared out some pretty major resistance levels on Friday, and we actually took out the high of last week. Now, last week we did have a gap down, so that Tuesday was the high, and we did take out the top end of that Tuesday gap down. So it was really kind of interesting week. I definitely thought we'd be bullish in the second half of the week. Didn't really care for the first half of the week price action. We were just, very ugly, kind of sold down, broke last week's low, and then we bounced then Thursday morning. So you can see here the sector performance throughout the week. You can see utilities and staples and healthcare were the lowest three performing sectors in the S&P 500. And then the three top performing sectors for the week: materials, energy, and industrials. Interesting. Typically, we've seen the risk off names up top or the risk on sectors really up top. And we didn't really see that. That's kind of interesting. So the risk off names were at the lower end. The risk on names were in the middle of the pack. And yeah, mixed in with kind of, real estate and financials as well. But yeah, up at the top end, materials, energy, and industrials. So kind of an interesting mixture throughout the week. But I wanted to show you this real quick. From that Thursday market open and that run up through the end of close Friday, we did have real estate up at the top. And I was really kind of led mostly by this Friday. You see this Friday surge right here to start out the day. Real estate really kind of took off, and that probably had a lot to do with the rates were dropping off pretty good on Friday, so real estate was catching a pretty good bounce there. And then you see utilities actually did pretty well to close out the week, and then you got tech, discretionary, and communication. So the three kind of risk on areas definitely kind of up towards the top part of Thursday and Friday's performance. So I would expect probably at least those three sectors to continue being bullish going into early next week. They were definitely leading the charge, especially TSLA on Friday, along with Meta and Apple and a few others. All right, so taking a look here at the calls and puts change week over week. You can see here, well, there's two new expirations that came up, April 14th and then October 20th. Okay, so those were the two new expirations that came out over the previous Friday. You can still see huge puts, okay, huge puts still stacking up. They're starting to really kind of stack in more to this April 21st. We saw that last week. There was a lot of puts kind of out there. What was also kind of interesting was the second highest number of puts that was registered was for this next Friday coming up, March 10th. And I would have to imagine a lot of these puts were probably purchased in the first half of this week when the market was bearish, maybe even Wednesday, Thursday morning as the market kind of was gapping down. So I would imagine a lot of people were probably getting bearish for that. And then obviously you then saw Thursday, Friday, the market changed and it just ripped it higher going into Friday close. So a lot of people probably trying to get bearish, and then the market just flips on them and then scoots bullish. A couple of things to kind of note here, though, is we're still seeing puts buying pretty much steadily throughout, exceeding the calls, right? Exceeding the calls is kind of the main point. There's a few instances out in the second half of the year you're seeing more call buying on some of those expirations, but we have an expiration coming up where we have a lot more calls that were purchased than puts. This was really interesting. We did not see nearly the put buying on the March 17th expiration that we saw for the calls. So it's almost like people are now leaning pretty strongly bullish here for the next 2 weeks. Maybe we get that run up, and that was kind of one of the things I was kind of looking for, was the second half of this week to be bullish, and then we go bullish into next week. And I'll give you a little bit more of that breakdown here just a little bit later. But it seems like after that, though, after about 2 weeks out, after that March 17th expiration, or maybe that CPI week, we're going to get CPI that week. You can tell the market is still feeling a whole lot of the bearishness, okay? So still time to just be careful, be cautious. But once we get past this March 17th with how many options are still sitting here at this expiration, gonna have to be a little bit more careful about what you're probably expecting on the bullish side on the market as we get all these puts to expire, and might just free up the market to kind of start that bearish trend again. We'll have to just wait and see what happens. Taking a look here at the VIX dropping off pretty strong, obviously on Thursday, Friday, as the market was just ripping higher. Not really much to say. What I'm really kind of looking forward to, or for, is here on the VIX is to get below 18 and just kind of hang out in here, not break 17. I don't want to see it break 17, but just kind of get below 18, just kind of steady out here, just kind of wait. And then if it kind of just hangs out down here, as then the market maybe starts to roll over possibly, I would be interested in that as the market moves lower and the VIX kind of just stays in that 17 to 18 type area. And if we kind of get that to play out, I'll make sure I call it out. But for now, that's kind of what I'm looking for on the VIX. But not really too much to see here other than the fact that this little inverted head and shoulders that I know some people were kind of looking for to continue higher. Obviously did not continue higher, and now we have broken down. So we'll see where the VIX gets to now. So the dollar. Okay, so I mentioned the dollar a little bit, and really what I was kind of looking for was consolidation, a little bit of a pullback, and it looks like we got a little bit of consolidation over the course of the week. Okay, Monday through Wednesday we had a pretty good little pullback. Tuesday a little bit of a bounce, and then Wednesday we continued a little bit of the pullback. But if you remember, the market and SPY, they just kind of steadily pulled back Monday, Tuesday, Wednesday. So this is something I was not really digging too much on the market. The dollar was dropping. We were seeing the dollar just kind of pull back, but we weren't really seeing the stock market continue up, continue bullish. And that's really kind of what I was looking for. We didn't really get that to kind of play out. So I'm still really cautious on the market. A lot of things just kind of moving right now. Some things are working in relationships, some things aren't. And you never know when it's going to continue to work in a relationship or when it's not. The way the market was strong Thursday and Friday, you really would have thought the dollar would have been dropping off hard. And it really kind of wasn't. It pulled back a little bit and kind of consolidated throughout the week, but it didn't have that same kind of relationship and feel that it's had kind of before, kind of throughout the month of February. And then looking here at the 10-year yield, Obviously, we continued higher. We finally broke above these wicks that were coming in on the daily. And then Wednesday, yeah, finally closed above these wicks. Thursday continued higher. And then Friday came right back down below those wicks. So it could be a false breakout. We'll see. But you notice here that, the market, was rallying pretty good, even with 10-year yield breaking out above these wicks on the daily. And, we saw the 10-year yield then drop off pretty good on Friday. And that was when also the market continued to kind of break out. Probably expect the 10-year yield to probably continue to come back, just kind of hang out, probably not do a whole lot, not drop off, not really bounce. I would just expect a lot of sideways. And a big reason why is going to be who's talking next week. Mr. Jerome Powell. We'll talk about that here in just a second. The 10 and 2-year yield continued to invert throughout the week as it kept dropping off. Tried to bounce a little bit Wednesday, Thursday, and then Friday obviously just got crushed right back down, mostly because the 10-year dropped so much. GLD catching a nice little bounce today throughout really the week. Yeah, I mean, Monday, Tuesday moved higher, and then even Wednesday continued to move higher. A little pullback then on Thursday, Friday continuation higher. So I would like to see it push a little bit higher and then probably drop off. Probably does happen here over the next couple of weeks. Not really gonna look to play this, but I don't think this is the end of the pullback. I expect we probably get something a little bit deeper, especially since I'm also eyeballing silver. The HYG high yield corporate bonds, and we'll take a look at the LQD as well. Nice little drop down this week, and then Thursday, Friday came right back in, got it right back to where it started out the week. So nice little possible double bottom action coming in here. We'll see it probably break this neckline, really kind of where it's sitting early this next week, continue to move higher. And I'm going to be curious to see where it retests. I still think it might retest up here into the 75, 76 type area, and then see where the stock market is at that point in time as well. But yeah, I'm going to be curious to see what levels the bonds and the stock market SPY kind of get to here over the next couple of weeks. LQD was pretty weak earlier this week. Just kind of kept breaking down. Was never really been strong here over the past 2 weeks, but obviously had a very nice snapback day on Friday. Basically getting back above this little breakdown from this early January, December kind of pivot level. So yeah, nice little pop, and we'll see where the HYG LQD kind of get to, and that relationship with the SPY. So yeah, looking here at the Q's looking pretty strong. Finally getting that bounce. This will probably be the bounce I was kind of been looking for, really here over the past week and a half. I don't know if we're gonna go make a new high over what we did in early February, but this is the one thing I'm gonna say about the market. Okay, Thursday's low is massively important. You finally see the bounce, right? We've finally seen the bounce. We broke this downtrend, right? We basically had a very clear during the week kind of, or during this move down from early February to kind of where we bounced Thursday. We had a very clear kind of downtrend trend line kind of coming in. And, that was about roughly in the same time when we got that pop Thursday midday. So what I can basically tell you is Thursday, that low right there is massively important on pretty much every major ETF out there, especially market-based ETFs. So yeah, definitely just kind of keep that in mind. That would be a pretty good line in the sand. Say, hey, if we get back below that, I would be hugely cautious. If you're not really wanting to be like cautious as we move higher, yeah, I would be definitely cautious if we broke that line right there on the Qs. So far right now on the Qs, it's right around that 388.5 area. So yeah, just keep an eye out for that. And here's the other thing: if we do move higher, okay, we take out early February highs, okay, and then we come back down and we tank out that low. Oh, that is going to be rough. Okay, that's going to be hugely rough for the market. The market's going to have a very hard time overcoming that. But right now, I would definitely have an alert set right under that Thursday low, or right at that Thursday low, because we get back there, especially if we take out that February high, it's going to be rough for the market. So taking a look here at the SPY. Now, we did see a little bit of weakness earlier this week, a little bit of bearishness earlier this week, and I just wasn't digging it. I wasn't digging it, and so just still market neutral. But we obviously very clearly finally got the bounce. It's a little bit different pattern, obviously, than what I was thinking last Friday, but it was kind of still what I was thinking. I just want to see more of a sideways consolidation, I guess Monday, Tuesday, Wednesday of this week, and then Thursday, Friday pop higher. Really, we just traded down, and then we had a massively strong pop higher Thursday open through Friday's close, and it looks pretty good. It looks bullish going into next week. I would expect it just to keep going higher as we go into Monday. Okay, now here's a very, very important detail about this next week. So Jerome Powell is going to be talking on Tuesday and Wednesday to the House or the Senate in the U.S. He's just basically going to be telling them, hey, this is what our viewpoints are of the economy, what we kind of need to do to get inflation under control and all that kind of stuff. So he's basically just going to be testifying to Congress or whatever. And we will also be getting Wednesday morning jobs reports on the JOLTS. Friday, we will be getting more job stuff coming out, non-farm payrolls, unemployment rate, and that kind of stuff. So we're going to be getting some stuff coming out this week, and these will be data points that are very impactful to Fed policy, okay? So if they come in really bad one way or another, expect the market to be moving. And here's the other thing is if the market moves up pretty good on Monday, which I'm not going to say it's going to move up as strong as what Thursday, Friday were, I would expect Monday to be bullish, though. Tuesday and Wednesday, I don't know. I would expect the market to probably be more flat sideways. But if you get weird jolts and moves, whether that's up or down throughout the day, just expect it to happen. Okay, I would expect that to happen. I wouldn't expect massive bearishness, massive moves, bullish or bearish, really. But I could see some intraday moves Thursday and Friday as he will be testifying. So yeah, I mean he's gonna have a mic. And whenever he's talking, the market does move and dark market does react. So I wouldn't expect him to come out and kind of give a whole lot of policy. This is what we're going to do stuff, but just expect him to be talking and the market to be a little whipsawing. So if the market does go sideways, I guess Tuesday, Wednesday, I would expect next week, Thursday, Friday, just to be a little bit more bullish. Maybe even push up into the 408, 410. And what's kind of interesting, we were kind of talking today on the live stream, and Rosebud even brought this up, is that this pattern that we got back here in early September through September 7th through the 12th, this nice little retest into a previous kind of support spot, and then we gap down and trade lower. So this is kind of an interesting pattern because if that's what happens here, and we push up into 408, 410 area, and I know that CPI is really like 6 trading days away, and we could definitely see this kind of happen, but a little bit more resting before we get to CPI, and then CPI is bad and it comes in really hot. Then the expectations for Fed to possibly even raise 50 basis points in March, really raises those odds. We could see, another gap down and trade lower. And if that happens, I mean, the market's going to be back into sell mode. And that's some of the things that we're kind of looking for. So, I mean, definitely could take a shot as we got back up into the 408 to 410 type area, somewhere up in here to possibly be bearish. I wouldn't be looking to be bearish over the course of like 4, 5, or 10 days. I would maybe say, hey, go out, a few months, have a little bit more of a longer term view on that. If you wanted to play that, or possibly if you like the idea of trying to get in bearish here, take a little bit of a smaller size, and then if it starts to work in your favor, always you can add to it. That's fine. You can do that. But I would not be looking to be getting in long as we moved higher. I would not chase this at all. So I would not be doing that. If we did move up or gapped up on CPI up over that February high, maybe even up into 420, man, you're going to get a lot of people selling up in that zone. So that's why it's marked red up there. So yeah, just be mindful of where you are on the marketplace. I would expect probably just bullishness throughout this week. But if we move up a little bit too high, yeah, I wouldn't be looking to be chasing it at all. Alpha Hunters, I'm going to go have dinner with the family. You guys have a great weekend. Make sure you just continue to manage your risk right now. There will be those opportunities. You just got to wait and let the market tell you what that opportunity is going to be. Okay? Alpha Hunters, have a great weekend and take care.